It was before the budget, in fact, even before the election, that we knew that the corporation tax rate was not going to drop from 19% to 17%. The saving is an apparent £6 billion. So especially in these straitened times, it's hardly surprising that that is going to be the case. The corporation tax rate is not going to be reduced below 19%. That still makes it one of the lowest in the developed world, and it still makes it an encouragement for people to trade through companies where it's otherwise appropriate. Money that you earn beyond your everyday living can be held inside the company and held subject to a much lower rate of tax. 19% could be significantly lower, often will be significantly lower than the rate that you would pay on that tax if you drew it out as salary or dividend. Money that's held in a company tends to store up, and my experience is that many people who are really good at running their companies and doing great business, doing their work well, tend to not pay much attention to their money, and it often just sits in a treasury reserve account or even just in an ordinary bank account, essentially earning almost nothing. With interest rates coming down to what they are currently and likely to stay at for the foreseeable future, expect for those businesses that are still thriving and doing well, the call for advice possibly on investing that money to secure a better return. Now, of course, people may be a little nervous about investing, but some may also take the view that the current market values represent a good buying opportunity if you believe that this current situation is temporary and asset values will recover. That's a whole different issue in terms of risk, perceived value and all the rest of it. But if there is an understanding of that and there is a desire to invest some corporate money that absolutely isn't needed for working capital to keep the business going, to pay staff, all of that, if it is genuine money that really isn't needed and there's no foreseeing that that would be needed in the future, then a straightforward investment in a unit trust can give rise to very attractive tax benefits. The dividends are completely tax-free. There's no tax on the capital gain until it's realised, and even then, when you realise it, the gain is taxed at corporation tax rates, not capital gains tax. So, of course, I'm very conscious of the fact that there'll be and is understandable, although sometimes not justifiable, nervousness over investing in the current markets. But there is a very strong reality that interest rates are very, very low. So I'd just say be prepared for those questions from companies about more effective investment of money currently held on deposit.